Right, now you're doing a Reg-A, aren't you? Tell me something about that, because this is something you actually turned me on to however many years ago it was. I had to spend a lot of time researching what the heck it was you were talking about then. I do know a little bit more about it now, but tell me, you've got another couple of offerings, don't you, going out? Tell me
Yeah,
about
so
those.
so the way to think about Caliber is think of a very, very, very small version of a Blackstone. We have an operating company that runs the business and earns a profit sharing on our assets and our funds as we perform. And then we have funds, which are all private companies, limited partnerships typically, that the investors typically invest in. So for the first time in the history of Caliber, we're allowing people to invest in the operating business, the parent company, the same company I own stock in. And for a minimum of $2,000, they can go online and invest in our Reg-A offering, and they don't have to be accredited, which is also the first time in the history of our company that we've allowed for that. And what it is, at the end of the day, there's a lot of different terms for it, but it's a pre-IPO offering. But it's a pre-IPO offering that allows an investor to buy stock prior to a public listing in a company, and they don't have to be Goldman Sachs. They don't have to be an institution.
So why is it, I got to cut you off. Why is it pre-IPO? A Reg-A, basically, it's I've heard it termed a mini IPO. I mean, that's basically it's a public offering, isn't it? You're offering it.
It is. It's a offering of common stock that's publicly available. The difference is the choice the company makes on, are they going to list that stock on the OTC on an exchange, or are they going to list the stock on the NASDAQ or the New York Stock Exchange? If they want to list it on a senior exchange, which is the NASDAQ or the New York Stock Exchange, then they're typically going to go through a secondary transaction, which is what Caliber's doing. And the benefit to that is, if I just take my Reg-A stock and list it online, I haven't gotten an underwriter involved. I don't have anybody that can support the stock in the aftermarket. I'm going to have a hard time attracting analyst coverage. And so, my crowd might buy my stock at $4 a share, but I might list it and it goes nowhere, or it starts to degrade over time because there's no volume in the stock. And so we think a smarter path is to issue the Reg-A first, let our crowd and everybody who's followed us for decades, invest now, and then issue a second offering through an S1, which is basically taking the same document we just got qualified by the SEC, modifying it in some ways and refiling it again, and then doing an underwritten IPO with a traditional investment bank. So we're raising basically 2 rounds of capital, one at $4 a share and an underwritten IPO at a different price that will hopefully be higher than $4 a share in about a year.